Hello and welcome back to the latest episode of Gina's Gems, where you get to meet the team behind the scenes. Today with me is Paul Hitchcox. He is our lead actuary out of Maine on an island in the middle of the Atlantic where the population is what, Paul, 65 on a good day?
65, it's the high.
Well, in any event, Paul's here to share some gems about the effect that rising interest rates are having on long-term disability pricing. So good to have you here, Paul. Thanks for being here.
Thank you.
Can I ask you to share a fun fact to kick us off?
Sure. A fun fact is that my father actually was an actuary, and he was one of the first to introduce long-term disability, LTD, back in the 60s. Social Security had been amended to include a disability benefit, and it made a lot of sense to wrap private insurance around Social Security. And he was the lone actuary at Unum back in those days, and helped propel the company into the #1 position that it held through the 80s and 90s.
That's amazing. Legend has it he developed LTD on the back of a napkin. Is that true?
True story.
I love it. Well, the apple obviously does not fall far from the tree.
Oh.
Lucky for us. Lucky for us. So, Paul, stating the obvious, we all know inflation is rampant, interest rates are rising, unemployment rates are at record lows. So can you share a little bit, what is the impact of the current economic environment?
Certainly, it's one of turmoil. There's no question that the high interest rates are impacting us all. Inflation is impacting us all. And it may be even that low unemployment is helping those few of us who look around and may consider a new job. So it's a lot of turmoil in the economy right now. One of the best ways or worst ways to see it is really about mortgages. If you look at a house mortgage from 6 months ago, you might have been able to get a 3% rate, for instance. A $2,000 a month payment would get you $500,000 in a mortgage. And so you could certainly, think about that $500,000 house. 6 months later, today, mortgage rates are up to 5% and above. And for that same $2,000 a month, you're only going to get about $380,000 in mortgage, and that's $120,000 loss earning power in the last 6 months. And if you think about that, at the same time houses are going up, it's incredibly impactful on the average consumer.
Yeah, exactly. A lot of us are feeling that pain for sure. So thank you. That's really helpful to paint a picture, but I want you to get a little bit into LTD in particular. So how does the current economic environment impact an employee who might be out on a long-term disability leave?
Right, no question. A long-term disability is there to provide long-term income replacement. And when you have inflation, especially numbers like 8%, that hurts those who are out on claim if they don't have a cost of living provision. The good news, so to speak, is that at least their assets in the bank might be earning a little bit more with the higher interest rates. And then finally, like I say, the low unemployment is providing some job opportunities for people to come off LTD and get back, return to work. And I think that's probably a little golden lining to the current turmoil.
Yeah, so maybe say a little bit more about what the impact is on our clients, so the buyers of the actual insurance in the large employer market.
Certainly, yeah. Just like banks, the banks don't mind a little bit extra investment income on their assets. Insurance companies are in the same place. So the higher interest rates, even despite higher inflation, does allow the insurance companies to earn more on their assets. And if they can earn more on their assets, that hopefully will translate into lower prices for our clients. And the best example is long-term disability, where asset investment is a key part of how you pay future claims on an LTD policy. And so to earn maybe 5% interest instead of 3% interest actually could drive down the price of LTD by up to 10%. So we're really very hopeful that with low unemployment, claimants going back to work, the investment rates being higher, LTD policies should be pretty good for our clients in the coming year.
Yeah, a little silver lining out there for our clients. So
Indeed.
Thank you so much for being here, Paul. I appreciate you sharing your insight and knowledge. And for those of you who joined us today, hope you took away some nuggets, and we'll see you back here in another 2 weeks. Thanks again, Paul. See you soon.
Thank you.